All right, hello everyone. Welcome to the next installment on Mrs. Royce's accounting lecture series. This lecture is on accounting for purchase transactions using a general journal. What we're going to do now is we're going to review a little bit, and I'm going to ask you a few questions. In addition to this, any words on these slides that are in the color red, these are going to be terms that we're going to need for our terms test. So I want you to think back. What would the journal entry be to record a purchase of merchandise using cash? Remember, we are a merchandising business. 3 Green buys merchandise to resell to its customers. So what would the journal entry be to record a purchase of merchandise using cash? That's exactly right. You would debit the purchases account and then you would credit the cash account. Always ask yourself the two questions. What two accounts are affected, or what accounts are affected? Sometimes remember it's not only two. And then is it a debit or a credit? How does it affect it? And then think of the normal balance. Now I want you to answer this question. Tell me what is the use of those special journals. And now I want you to list 4 of them, the 4 that we've been using. Can every transaction be recorded in a general journal? A special journal? Can every one of them that the business does be recorded in a special journal? No, it can't. Not every transaction can be recorded in a special journal. So now I want us to think back to what a general journal is. A general journal is a journal with 2 amount columns, the debit and the credit, in which all kinds of entries can be recorded. That's the general journal. Everything can go in there. Now I want you to think about this. Because we are a business that purchases merchandise from a vendor, okay? We are the customer, they're the vendor, they're the ones providing us with the merchandise. What happens if we also buy supplies from them for our office or our store? How are we going to tell from the invoice coming in whether it's a merchandise purchase or a supplies office purchase? Because that makes a difference, does it not? Would we record our office supplies purchases in our purchases account? No, we would not. Purchases is only for merchandise inventory. So now I want you to think like an accountant for a second, and can you think of a source document that would distinguish the difference between those 2 transactions? Because you're going to be getting an invoice in, so what could it be? A memorandum. Now, if you weren't quite sure of the answer to this question, we've talked about a lot of different source documents through this. We've learned about terminal summary reports when we cash and Z out our register. We've learned about memorandums way back when in the service business. So a merchandising business also can use a memorandum to show that you purchase supplies on account. So what you do is you do your memorandum, you have your number, and of course the date, and then here is where you write on and attach it to the invoice that the supplies were bought on account. Doesn't say merchandise, it says supplies. That's how you know the difference. Now tell me, what would buying supplies on account look like? Think back, how would you do it? So let's make up a journal entry. December 2nd, we bought store supplies on account, store supplies, from Estes Supply. And then there's our memorandum for 42. How do we journal this transaction? Yes, what 2 accounts are affected? Well, supplies. And we got those in, so it's a debit. On account from Estes, so it's going to be accounts payable, okay, for the 165. So there's where you balance. And you have to remember to put the Estes on there. This is what the general journal would look like. You have your date, your supplies store, your document number, which is a memo, and here's the debit, and here's the credit. Accounts payable, Estes supply. Why do you think there's a line here? Just think about the question. Why do you think there's a line there? It's going to go in that accounts payable special journal Estes supply, so you don't need a post reference there. This is just to record the memorandum. Now, we are a business. We're selling and shipping merchandise. But have you ever purchased merchandise that you've had to return? Yes? No? Do you think we as accountants need to record or keep track of any merchandise that's sent out, possibly, and then returned? Yes, we do. Why? Think of it this way too. Do you think when we order stuff from our vendors, do you think that what if it comes lost or broken or never gets here? How do you think we handle this when we get broken, lost merchandise? What happens? How do you think accountants deal with that situation when we order something and it's broken? Well, there's another use for the debit memorandum. And what the accounting titles are is for purchases, returns, and allowances. Purchase, returns, and allowances. Well, what does that even mean? It means that if you get something that you need to return, a credit is allowed for the purchase price of the returned merchandise, which results in a decrease in the customer's accounts payable account to the vendor. This is a purchases return, which means if you get something sent to you that you purchased and it's broken, you get to return it for the purchase price. Okay, just the purchase price. You do not get reimbursed for shipping or any of that. It's just the purchase price. So again, a debit memorandum for purchase allowances is the credit allowed for part of the merchant purchasing price of a merchandise that's not returned, resulting in the decrease of the customer account. Now I'm going to ask you, and I'm going to explain what a purchase allowance is. A credit allowed for part of the purchase price of the merchandise that's not returned, resulting in a decrease in the customer's accounts payable to the vendor. Which means, what if it's not all damaged? So it would be a partial credit, because you still had the benefit of maybe half of the order that was not damaged. So that is called a purchase allowance. So the form that's prepared by the customer, which would be us because we purchased the merchandise, showing the price reduction taken, is called a debit memorandum. So we use that debit memorandum as that source document to show that, and we prepare it and send it to them. And it looks something like this. So 3 green, we got something from Mobley, something was damaged, and then here's our credit. But as you notice, sales tax is not reimbursed. Why? Because we purchased it. They do not reimburse the sales tax. Okay, so this is what a debit memorandum for purchases would look like for a return and allowance. Now, how do we journal this? So let's look at what a journal entry would look like. It would say something like December 8th, returned merchandise to Mobley Tools, $43.90, which is what that previous screen showed, covering purchase invoice number. Okay, the debit memorandum would be attached to that. Number 38 would be attached to the purchase invoice. So how do you think that we would journalize this? Well, accounts payable would have to be debited. purchases and returns and allowances would have to be credited. The normal balance for purchases, returns, and allowances is a credit balance. Here is your accounts payable. So this is what the general journal would record. We debited accounts payable Mobley Tools, which takes out the money we owe, and we had to put this into purchases, returns, and allowances here. And then you have your debit memorandum number 38. So that's how we go through and we record if we have to return merchandise to somebody that we've purchased it from. Since we have journaled everything into the general journal, now I'm going to show you how we post it from the journal to the accounts payable and the subsidiary ledgers. So this is what it looks like. If we took the general journal, we've got page 12. On December 2nd, we purchased supplies for the store, right? And here's your memorandum for the $165.25. And then the accounts payable is Estes Supplies, okay? And we owe them that money. Then what happened on the 8th is we had accounts payable for Mobley, right? Because there was some damage. And then we know that because it says purchases, returns, and allowances. So how are we going to ledger this? Well, let me show you. First, you're going to show that we owe the money to Estes Supply. Vendor number 220 goes here, okay? And here is the $165.25. So right now we owe him this money. Then we look at accounts payable Mobley Tools. DM. Okay. General Journal page 12. Here. This means we don't owe Mobley Tools that $43.90 and it ended up decreasing the balance. So that's how you post from the general ledger to the special journals. Now you're also going to want to do supplies store. We're going to make sure that we ledger that we bought $165 worth of supplies for the store. And see how this is split? We're also going to put in accounts payable that credit that we earned there. So now let's look at the flip side. If you look at this and us as customers can return damaged merchandise, that also means that our customers can do that too. So in previous chapters, we looked at how we use the purchases journal and the vendor accounts to record what we purchase. Then we learned to use the sales journal and the accounts receivable subsidiary ledger to record what we have our customers purchase on account. Now we have to do this flip side again and say, how are we going to allow for returns from our customers? And here's some more of the red. So it would be instead of a debit memorandum, it would be a credit memorandum for sales, returns, and allowances. Now I want you to read this yourself and see if this makes any sense. So now let's look at this. Here we are, we're 3 green products. Our source document is the credit memorandum, okay, for the sales returns. So apparently Lake Automotive, which is one of our customers, went ahead and returned 3 of the batteries, and we are going to return their sales tax. So December 16th, we granted a credit to Lake Automotive for the merchandise returned. The $65.85 plus the sales tax that they paid from S500 for a total of $69.80. Because the sale did not go through, we have to return his sales tax because it is not owed to the government. So think about how this would look. credit to Lake Automotive for merchandise returned, sales tax, and the credit memorandum. So sales returns and allowances is going to be debited. Sales tax payable is going to be debited. Remember the sales tax payable account, is it a liability? Yes, that's why a debit will decrease it. Sales returns and allowances, its normal balance is a debit. That's why this increases it. So now we've got the 6585 to record our sales returns, because do we have to keep track of that? Yeah, we have to know if what we've sold, what went out, if it came back in. We have to look at that. Businesses will look at what products they've sold and what's come back in and say, how come we're getting so many customer returns? We do not have to pay all that sales tax to the government. And then our accounts receivable is decreased because they don't owe this anymore because they've returned the money or the merchandise. So now if you look at what the general journal looks like, again, we're still on page 12. It would be sales returns and allowances. This would be the credit memo of 14. Then we just journal it. Sales returns and allowances is the debit for $65.85. Sales tax payable, debit, $395. And then accounts receivable, Lake Automotive, is credited because they don't owe us this money anymore because they returned the merchandise. So take a few minutes and just digest the way this looks. Reread this, look at this, and see how it's posted. So now we're looking at, again, the general journal. How are we going to record this from the general journal to the accounts receivable ledger? We have to take this off of Lake Automotive. We gave him the credit. He bought it on account. It showed up damaged. So we have to credit his customer account for $130. Now I want you to think like an accountant. How would you correct this error? And then we're going to go over it in class. All right, thanks for listening. I will see you later.